Assalamu alaikum class. Today we are starting a new topic that is stockholder equity. Before practicing questions, let's cover some basic concepts. What is a corporation? So it is a business organization legally separate from its owners with its own rights and responsibilities, and the corporation owns its asset and is liable for its debt and pay taxes on its earning. It can also enter contracts and sue and be sued just like a person. So, who are stockholders? Stockholders, or you can say shareholders, are the owners of the company or the corporation. They own shares and own the company, but they don't take part in its daily operation. Instead, they have rights like voting on key decisions and receive dividends when profit are distributed. So the main goal is to increase the value of their shares over the time. The next important thing we should know what is paid in capital, because today in this lecture we are covering the problems that are related to paid in capital. So first of all we should know that what is paid in capital. This paid in capital is also known as contributed capital, and it represents the total amount of money or assets the shareholder contribute to a company in exchange for ownership through stock. It includes two main, or you can say, uh, key components. First of all, paid in capital has a par value. So, what is a par value? It is the nominal or face value that is assigned to each share of stock, and usually it is a small amount, like $1 or less, and it is often a legal requirement, but it does not reflect the stock's market value. So, what is market value? So, market value, it may be different from the par value. Market value is simply a value of the share that reflects the price at which a particular share is bought or sold in the stock market. So, this is the market value. And uh, uh, one more important thing is the additional paid in capital. One is the par value, and other thing is the additional paid in capital. Additional paid in capital is also called premium. It is an amount paid by investors over and above the par value. For example, if a company issues shares with a par value of $1, but it sells them for $10. So this means that this extra $9 per share goes into additional paid in capital. This $9 basically represents the premium. Oh, and this amount is over and above of the par value. So this is important. And one more thing, you can see that the stockholders' equity is increased in two ways. First of all, contribution by investors in exchange for capital stock. And we have just discussed that the contribution by investors can be classified into two different, you can say, two different types. You cannot say it is a type, it can be classified into different separate class. For example, par value as well as additional paid in capital. So we have par value, which is the face value, and additional paid in capital means the total premium. On the other side, we have retention of profit earned by the corporation, which is called retained earning. So you can say that total stockholder equity portion can be divided into two parts. One is contributed capital, which is the stock value at par plus capital in excess of par. and the retained earnings. So we have contributed capital and the retained earnings. And when we add all of these, we get total stockholders' equity. And this total stockholder equity represent the equity portion in a balance sheet. Uh, and one more thing that we have two type of shares, common stock and the preferred stock. We will discuss preferred stock later in the same lecture when we will discuss about the preferred stock. So for the time being, we have common stock, and this is the common stockholder equity, and this equity portion represent partial balance sheet in which we represent stockholder equity. So let's begin with some exercises. And for exercising, we are covering problems from financial and managerial accounting book written by William Haka Bettner, and we are covering chapter 11, which is stockholder equity. Right now, you have a brief exercise 11.1 in front of you. So let's begin. Alpha Company sold 10,000 shares of common stock. So we are talking about common stock, and 10,000 number of shares are sold, which has a par value. So we have discussed two type of values, par values and the premium. So the par value is 10,000 and $10, and it is sold for $13 per share. So the difference between par and the market value is right now $3. So $3 would be your additional paid in capital, or it can be called premium on your stock. The company's balance in the retained earning is 75,000. So this is the retained earning, $75,000. Prepare a stockholder equity section of the company's balance sheet. So stockholder equity section is required. So first of all, while preparing balance sheet, we write the name of the company, Alpha Company, and we are preparing balance sheet, but partial. Date is not given. Uh, partial, RTI, partial balance sheet. And again, we are preparing stockholders equity. So in stockholder equity section, first of all, we have issued shares. So common stock, and this common stock is total issued shares are 10,000. So 10,000 shares or 10,000 stock, and one share par value at the rate dollar. Uh, Par value is $10. So when we multiply 10,000 from $10, the amount would be 100,000. $100,000. And then we represent additional paid in capital, or you can say premium, separately. So additional paid in capital, and this can be calculated like we have issued 10,000 shares, so 10,000 shares, and the premium amount is $3. The difference between uh, $10, this is the par value, and this is the market price. The company actually, a company sold their shares with $13 price. So the difference is three. So $3. So here we have $30,000, and then this both of this, by adding both of this represent Contributed capital means common stock at par plus additional paid in capital. When we add both of them, this represents total contributed capital. And then we have retained earnings. So retained earnings is given $75,000. So we have 75,000. And when we add all of them, so this 205 represents your total stockholder equity section, or you can say total stockholder equity. Total equity. So that's it from this exercise. 11.1. What we did, we prepare a stockholder equity section of the balance sheet, and we have discussed two things. We have contributed capital. This contributed capital can be divided into common stock, which represent or which is presented at par value, and other thing is additional paid in capital. Then we have separately retained earnings. When we add all of these, so we get total stockholder equity. The second exercise is 11.2. In this exercise, now we have 10,000 shares of common stock. We have already discussed what is common stock, common shares, and it has a par value of $25, whereas it is sold for 27. So the difference between 27 and 25 is $2. So this $2 basically represents additional paid in capital. The company also sold 1,000 shares of dollar 100 par value of preferred stock for 110. So what is preferred stock? Now we have learned about preferred stock, so we should know what is preferred stock. So preferred stock is a type of equity. It is also equity. So it is a type of equity that gives shareholder certain privileges over common stockholders. So we have two type of stockholders right now: common stockholders and preferred stockholders. So preferred, just name suggests preferred. So preferred stockholders get some privileges over common stockholder. Um, Mostly preferred stockholder do not have any voting rights, but they have certain advantages. So first advantage, they have the priority in dividends. That is, when dividends are paid, so preferred stockholders are paid before common stockholders, and dividends are often fixed. Here you can see this this is right now, this is just a preferred stock. We are not talking about dividends, but dividends are generally fixed in case of preferred stocks. Um, and the second advantage they have priority in liquidation. That is, if a company goes bankrupt or is liquidated, then preferred stockholder have a higher claim on assets than common stockholders, but still they rank behind debt holders or creditors, you can say. The another interesting feature they have is convertible features. That is, some preferred stock can be converted into common shares, allowing holders to switch to common stock if they chooses. Means this is their choice. They may convert their preferred stock into common stock. So preferred stock act more like a hybrid between common stock and debt because of its fixed dividend and preferential treatment. As we have discussed, that they have priority in dividend, they have priority in liquidation. However, it does not appreciate its value, or you can say its market value, in the same way as common stock might have. So this is all about preferred stock right now. So here we have two type of stock: common stock and preferred stock. And the retained earnings, $100,000 is also given. And what is required to prepare stockholder equity section of the company's balance sheet? So The same heading, that the name of the company, Beta Co, and balance sheet, and we are preparing partial balance sheet, and we are preparing stockholders equity section only. So now, first we present preferred stock. It is the way of presentation, or you may present common stock. So we common stock. We are going to present common stock, and common stock with the par value. So 10,000 shares are issued at the rate, par value is 25. You can say it is given at the rate $25 per share. So when we multiply 10,000 shares into 25 per share, we get $250,000. Then we present preferred stock at par value. So preferred stock, how many shares? 1,000 shares. They have issued 1,000 shares. So 1,000 shares at the rate one share per, the price is, par value is $100. So multiply by $100 per share. So when we multiply 1,000 share with $100, we get $100,000. Then we present additional paid-in capital. Paid-in capital. So additional paid-in capital, you can say we have, this is the way of presentation. So additional paid-in capital, we have on one side, we have common common stock, 10,000 shares, and the additional, or the premium was $2. So when we multiply it by $2, we get $20,000. And then preferred share, and the amount of premium was $10 because $100 par value and $110 was the market value. The difference between these two is $10. So when we multiply 1,000 by 10, we get $10,000. And then retain earning. So we have retained earnings also. And retained earnings total amount is this one, $100,000. $100,000. So when we add all of these, we get total stockholders equity. So the total stockholder equity is $480,000. So this is the answer. Total stockholder equity is required. We will also cover one more exercises that is related with the stockholder equity portion, and the exercise number is 11.3. So in this data, we have the company was formed with, so we have authorized shares. So what is authorized shares? So authorized share, you can say it is the maximum amount of stock a company is legally allowed to issue as approved in its corporate charter. It represents the total number of shares the company can offer to investors, but remember, not all of it may be issued immediately. So it is just authorized capital which represent the total number of shares that are allowed to be issued by a company. On the other side, we have 8% cumulative preferred stock. So this 8% represent the rate of dividends, and cumulative means the company has to pay dividends uh, each year. Each year, and if a company is not able to pay dividend in 1 year for any reason, for maybe due to the less profit or any other reason, then the dividend is going to be cumulate, and next year the company will have to pay the previous year dividend first, and then anything to the common stockholders. So we will discuss this in detail, and then in the next lecture, then we have 100,000 shares of $2 stated value. Stated value means par value, common stock. So half of the preferred stock were issued. Preferred stock over total, how many shares? 5,000 shares. Half means 2,500 shares were issued at a price of 103. So 103 is the market value, whereas par value is 100. So this means that $3 is the premium. Then 70,000 of the common stock were also sold at the rate of 13. So $2 is the par value, whereas the difference between 13 and 2 is 11, and this 11 represent additional paid in capital, or you can say premium. And retained earning is also given. So prepare the stockholder equity section of the company's balance sheet at the end of the current year. So now we are going to solve it, or we are going to prepare equity portion in the balance sheet, stockholder equity portion of the balance sheet. So here we have the name of the corporation, and then we balance sheet. So we are going to prepare stockholders equity. Now, in stockholder equity, we have common stock, and total 70,000 shares were issued. So 70,000 shares at the rate par value. So par value was $2. $2. So when we multiply 70 by $2, we get $140,000. Then we have 8%, 8% cumulative preferred stock, because it is, yes, cumulative preferred stock. So 8% cumulative preferred stock, which is how many shares are issued. Total authorized shares were 5,000, and half of them were issued. So 2,500 shares at the rate par value is $100. So $100 per share. So when we multiply 2,500 into 100, the amount is this. Then we represent additional paid in capital. So common stock, 70,000 shares were issued, and the premium was 11. How this is 11? Because 200 is the stated or par, sorry, $2 is stated or par value, whereas $13 is the market value. So the difference between 13 and 2 is 11. So we multiply 70,000 by 11. Then we have additional paid-in capital of preferred stock. So 8, 8% cumulative, and the difference between the par value and the market value of the preferred stock is $3. So this is just for $3. So when we multiply 7,500 by 3, this is the amount. So when one more thing is retain earning. So retained earnings is also present, which is 382,382,000. So what now? Total stockholder equity is, when we add all of them, this is 15. 64 is 75. Cumulative share is $3, and this is when we multiply how many shares? No, it is not 75, it is 225. So this is your total common stockholder equity, uh, and this is total stockholders equity. Now, what we did, we basically took here total number of shares or wrong number of shares. Now, the total number of shares are, you can see 2,500, and we multiply it with the premium amount. So here we have this stockholder equity. So this is the portion of stockholder equity. The second is, assume that the company's common stock is trading at $24 per share and its preferred stock is trading at 107 per share at the end of the current year. Would this stockholder section prepared in Part A be affected by this additional information? Uh, no, not right now. No, because the market value of a corporation stock has no effect on the amount in official, you can say in the financial statements. Capital stock is recorded at the amount for which it was originally issued. Market value may be different. Market value basically changes on every day. So you cannot change this amount on balance sheet every day. So we can say that no, the equity section will not be affected by this additional information. So that's it from this lecture. Take care, class.